Hey everybody, I hope everyone is doing well and had a good day. In this video, I'm going to review the Emini 5-minute chart for Tuesday, September 9th, 2025. Going into the day, we can see there's a very small gap up from the close of yesterday and the open of today. When that's the case, I usually just watch the RTH, regular trading hours chart. I'll just look at this chart and continue to trade as if the chart is continuous. We can infer their trading range overnight because the gap is small. And going into the day, we know that yesterday it's a trading range day. Another thing to know going into the day is that most bars break out beyond the high or the low of the prior day or the prior bar. And there's no exception on the daily chart. So that's why I have the prior day's high and low marked with blue lines, because the odds are we're going to test at least one of the two support or resistance areas. And usually the prior day's low will act as support and the prior day's high act as resistance. Going into the day, I said it's a trading range. We have several legs down, 3 legs down, maybe 4. It's a wedge, double bottom, trendline break. And the rally up to bar 1 here, the start of the day, is strong enough. There's trapped traders below. The odds are the bulls will get a second leg up. Trading range bar on 2, we found sellers above bar 1, which was an outside bar with bar 81 yesterday. So trading range bar 1, sellers above, but bar 2 is a weak sell signal. It's a trading range signal bar and it's a tight bull channel. So the odds are it's probably buyers below. Again, a second leg up is likely. We found buyers below on 3. Now 3 is a high 1, but if we look to the left, relatively high in the range. We're testing resistance from yesterday. And so there actually might be more sellers above 3, as we find maybe we've got 3 pushes up, 1 or 1, 2, 3. There might be sellers above 3. The buyers may wait for a pullback before they come in. And 4, inside bear bar, or maybe a slight breakout. Note, bar 4 is an inside bar, so range compression, probably sellers above, and we may go a little bit lower. There's room for a scalp to the moving average, but the downside here is probably limited because we have open gaps. The bull breakout is still strong enough for a second leg, and it has not gotten it yet. So any reversal here is probably going to be minor. Bar 5, bear breakout bar, closing on its low. It's a good looking bar for the bears, but the context is not very good. Because I said tight bull channel, second leg up likely. And what's the leg count for bar 5? A couple ways to look at it. We had a spike break when bar 1 went below bar 81. So maybe that's leg 1. Deep pullback, leg 2 down to 5. But also it's 2 pushes from the high of 2 to the low of 3. Pullback, and then a second push down. Even 4 and 5. There's a push, a pullback, and a second push. So 5 might be more clear on a lower time frame, a second leg trap to support, testing several layers of support. There's the moving average, there's the breakout point from this prior high. It's also the high of bar 77, the breakout point from 78. So a couple of reasons that 5 might be a better buy the close bar than it is good for selling. But 4 bar micro channel is probably also sellers above bar 5. So 6, we went outside up, but sellers above 5 likely, and probably the bears will get some kind of a second leg down after this breakout. And then outside bar 7, consecutive outside bars, breakout mode, but in a trading range. just tells you the market's going sideways in a trading range. 7 similar to 5. Now it's 3 pushes down. 1, 2, and 3. So 7 similar to 5. Probably better to look to buy in this area at support because the bulls will still probably get a better second leg than 6 and 7. Bull inside bar on 8, but probably go at least a little bit higher. Bull breakout needs a second leg. Will probably test the highs, probably test the high of 2. And again, yesterday's high is a magnet that we may have to get to. 9 broke out but found sellers above. Market's in a channel phase at this point. So bulls will take profits at the highs, and we are still within the range of yesterday. So overall, it's a big trading range. Also, if we look at the structure of the open today, even just from bar 1, we have an expanding triangle. We went to a new high, went to a new low, went to a new high, so we might find sellers above and fall to a new low. Bear breakout 10, the bulls have an argument. Maybe it's a head and shoulders bottom, left shoulder, head, right shoulder, and it's a bull flag, so bull breakout, and it's a spike in channel. Bars are staying above the moving average. Maybe this is another higher low, but the bears have a breakout with a gap from the prior bar's low to the close, which is open. And bar 10 may need a small second leg. And then bears got follow through selling 11 and 12, 4-bar micro channel to 12, probably sellers above. Might even be sell to close 12 because a second leg down is likely. We also got the possible expanding triangle, bear channel line below, which is a magnet. And then 13 a give up bar. Other ways to draw that channel line. So 13, possibly a sell vacuum testing support. Also, if we look to the left, we're testing support low in the trading range from yesterday. Whenever there's a big bar like 13, you have to take a second and really think about what's happening, especially when it's not clearly breaking out of all the bars to the left. It's good that it's breaking out below these bars, but it's not breaking out below all of the bars to the left. So it might just be maybe it's a second leg trap, 1 pullback, big second leg to the bottom of a trading range. As far as selling, bar 13, if you sell, you have to ask yourself, what's your premise? 13 is a big bar, forcing you to take on big risk. Even if your stop's above the bar, 1 times your risk is all the way down here. And you're looking for a pretty significant breakout of the trading range. And 80% of breakouts of trading ranges fail. If you're selling 13, you need sustained momentum. And if the bears do not get sustained momentum, they may give up and look to sell higher. And the bears failed to get follow-through selling, 14 and 15, micro double bottom, at the bottom of the trading range. So 13 might be an exhaustive sell climax. And if we think about what's more likely, are we going to fall for a measured move based on the height of the bar, or are we going to test the high of the bar? At this point, when the bears don't get sustained momentum, and we're at the bottom of a trading range, I'm thinking we're probably going to pull back first, maybe even get all the way back up here. Bull breakout 16, second leg up, likely, probably buyers below. It's a bad low 1 at the bottom of a trading range. And then follow through buying 17, 3-bar micro channel, but forcing you to buy near the breakout point. There's the bar 12 low, the 6 and 7 lows, the bodies, everywhere in this area. Support and resistance are a zone. It's not really, there's not like one specific line. So I'm drawing 2 lines to show that it's a zone. And I can also add the rectangle to demonstrate that better. This is a resistance area, this zone between these 2 horizontal lines. The expectation, there's probably sellers up here. The big bear breakout traps traders above. We had a fairly tight trading range up here. Big bear breakout, trapping a lot of traders into buying too high. The traders who bought up here get trapped into a losing position. The bears who did not sell wish they sold. Now the market's getting a deep pullback, which is expected in a trading range. And now 3-bar micro channel, the bulls are expecting to get a second leg up, but the bulls don't want to buy the close of 17, at least not necessarily, because it's forcing you to buy at the resistance levels. So rather than buy here, the bull might buy a pullback, maybe a 50% pullback, something like that. Also, I like to look at the bodies for breakout points. The low close of 5 is the breakout point that I have drawn here. And you can see the market tested on 18 and 19. 18, 19, probably a minor reversal. The bears are hoping it's the start of a second leg down, but the rally is stronger than the reversible attempt. Probably buyers below again at probably the midpoint, maybe a little lower. And the bulls will probably get a second leg up before the bears get a second leg, if they get one at all. So 20 testing that midpoint, bulls starting to get their second leg, but then there's probably sellers at the breakout point and at the high of 18. So 24 breaking out, but now it's 2 legs up, testing resistance in a trading range. So not necessarily the best place to be buying. It's aggressive to sell the close, but also reasonable. Okay to exit, longs below 25, 2 legs up, bear bar closing at or below its midpoint. Bear breakout 26, reasonable, sell the close, again 2 legs up to resistance. Leg 1 bear breakout, probably good for at least a scalp. 27 bear breakout bar, good for the bears, but testing support. Last time we were here, maybe a little lower, the market bounced. So again, it's kind of like 13. The bears need momentum. They need follow-through selling. And 28, disappointing follow-through. It's a follow-through bar, but it's overlapping the prior bar. It's smaller. It didn't go much lower. So it's basically a low 1 at support on a lower time frame. Bulls, they see maybe it's a trendline break, retest, higher low, major trend reversal. The bulls are hoping they can just pull their stops below 20 and will continue to get higher lows. So they'll buy the close 28, hoping it's a bad low 1. Market won't go much lower, and they'll rely on their stops below 20. Breakout bar 29, but right to the top of the range. Probably a profit-taking bar. It's also 3 legs up. Not ideal for buying here. 30, you can see the reaction. Lots of selling back at resistance. Not ideal place to buy, but traders will buy a pullback. 4-bar micro channel. Bears are getting their second leg. 28 is a bad stop order signal bar. That becomes support, the high of 28. And 29 needs a second leg. So 30 might be a buy the close bar. And then the bulls get their second leg. This is more sustained buying. This 3-bar micro channel, not very climactic. Bars closing above the high of the prior bar. They're uniform in size. So this probably needs a second leg itself. Probably buyers below 33. 34, probably buyers below. It's a weak sell setup, especially after the micro channel. And then the bulls pull back and then get their second leg. The bulls start to collect bars above the moving average. So at a certain point, we get maybe, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Somewhere in this area, 10, 11, 12 bars above the moving average. Bulls might start to see it as a trend. We're getting higher highs and higher lows, and it's fairly tight. The selling pressure since here has been really weak. So we get a give up bar 43. Probably okay to buy the close and buy a pullback. Traders scalping out on 45. 45 similar to 34. In this case, probably even worse because this is a fairly tight channel with little selling pressure. 45 is a doji signal bar for selling, probably buyers below. maybe a 2-leg pullback, and 47. Bulls will use 47, and if it goes a little higher, to take profits. Since we pulled back, we're in the channel phase, so buyers below bars, and sellers at a new high. So profit taking, but 48, another weak sell set up, probably buyers below. And again, testing the highs, you're going to find profit taking. You also have yesterday's high, which should act as resistance, but at this point we're getting small pullback, bull trending behavior. There's really not a strong argument for selling here. All of this is a breakout on a higher time frame. We're getting open gaps, very little selling pressure, so it's okay to be long here, despite the resistance above. 54 weak sell, buyers below, buy the close. Buyers below, 57. It's a small trend line break, but not very significant. Okay to be long still. 60, couple legs, sideways to down. 60 is probably by the close bar. 61 also probably by the close bar. 3-bar micro channel, but a second leg down to support in a bull trend, so okay to buy. Might be profit taking at the highs, 64, but okay to buy 64 and scale in. Because it broke out to a new high and it's a channel, traders will sell above, but the breakout is in a bull trend and it's strong enough for a second leg. So here, traders will buy maybe the 50% pullback, and if it pulls back deeper. So 66, probably better for buying. Couple pushes down, 1, pause 2, buy the close 68, and buy below 64. 69 crossing the moving average. Good for the bears, but in the big picture, still probably a minor reversal. And also testing 57, so it's a double bottom bull flag. Just when it looks like it might flip to always in short, and the bears need one more bar, they usually do not get it. And then we got 70. 70 is a reasonable stop order buy, okay to buy, and if you're short, exit above 70. Rally to a new high. Expect profit taking at the high, but the rally was fairly strong. 73, a weak sell signal, probably buy the close, buy below. Getting too late in the day to trade, but the selling pressure here is still weak. This is a minor reversal, probably okay to buy. 77. 78 is a weak sell signal, probably buy below it. And then outside up, back to a new high. Alright, that's going to be it for today's end of day review. Thanks everybody for watching and listening, and I hope everybody has a good night.